Hello, and welcome back. Again, my name is Tyler Sutherland of the Tyler Sutherland Mortgage Group and the SaltLakeMortgageVoice.com. My team works with Veritas Funding, Utah's #1 purchase lender and recipient of the 2013 Best in State Mortgage Banker. Our reputation has been built upon providing an unmatched knowledge of loan programs, the best operations department in the business, and most importantly, providing a level of service that is second to none. In previous videos, I have referenced a video that deals specifically with assets, sourcing those assets, and addressing the need to avoid financial changes throughout the loan process. We are now going to discuss those items more in depth. Once your loan documents have been provided to us for an approval, there are a number of things that you should avoid doing that will change your financial picture. Remember that we, as your mortgage lender, are looking for stability and consistency, and accuracy as well. If you would like to make this process of borrowing hundreds of thousands of dollars and into the millions of dollars as smooth as possible, it is best to have a good understanding of the documentation needed, why that documentation is needed, and finally, how to minimize the amount of documentation that will need to be provided. As I stated in earlier videos, these lending guidelines are set by Fannie Mae, Freddie Mac, FHA, USDA, VA, Utah Housing, and jumbo lenders. Rules are rules, and unfortunately, there's no way to circumvent these rules. They are created by government-backed and sponsored entities, and much like stocks, mortgage-backed securities are traded on the open market. If a mortgage loan does not meet the rules and guidelines set forth by these institutions, the loans have no marketable value. With no marketable value, that loan forever remains on the balance sheet of the lender, which decreases the amount of money that a lending institution has available to lend to its borrowers. While we are the institution who is lending you the money, these are the entities that set the rules and we must abide by them. As your mortgage lender, we are looking to see where your down payment and closing costs, as well as reserve requirements and funds to pay off other liabilities come from. Okay? Reserve requirements are the funds that are required to be in the asset account after the loan has closed and funded. Proof of these liquid assets has been requested in earlier emails and videos. Assets would include bank statements for checking and savings accounts, verification of investment, 401k, IRA, retirement funds, and any other liquid assets you may have and or using for these costs. Assets must be either seasoned or sourced. Seasoned means that the funds to close need to be in the asset accounts for at least 60 days. If the funds have been deposited into your account within the past 60 days, then we will have to source where these deposits come from. Sourcing funds means that we need to provide proof and accurate documentation of where the deposits came from. This documentation needs to be a clear and understandable paper trail, which could include copies of canceled checks, copies of deposit slips, and any other documentation that you can think of to help demonstrate where that deposit came from. While there are different exceptions made for different amounts of income earned, when sourcing assets, being proactive is always the best approach. So, as a rule of thumb, it is best to source any deposit over $100. If payroll checks are automatically deposited into an asset account, we can see that it is a payroll, and we can see that it's a payroll check. At that point, non-payroll deposits will be the only deposits that need to be sourced. Sourcing these deposits often seems a bit trivial for borrowers and can be a common source of frustration while going through the loan process. Believe me, it is our biggest frustration as well when we're working so hard to provide you a level of service that is second to none. Just try and remember that where there is a rhyme, there is a reason. While determining where these assets came from doesn't directly affect income, deposits could affect a borrower's ability to repay the loan. For example, if a large deposit is made into an account and the funds for that deposit were borrowed, we now have an added monthly liability that needs to be included in the debt-to-income ratio. Sometimes these deposits are gifts. Some loans allow gift funds, some loans don't allow gift funds, and some loan programs allow gift funds only after a specific contribution amount has already been met. It all plays into the ability of a borrower to repay the loan and meet underwriting guidelines necessary to obtain a loan approval. So, While questions may arise as to why we need the documentation, please understand we would like to bypass requesting this information as much as you would like to not have to provide it. But once again, rules are rules. We don't make the rules, but we are required to follow these rules. As your mortgage professionals, we will continue to try and minimize the requests made for you, of you for your documentation. However, the money that people have, where that money comes from, and how that money transfer of money takes place is very different with each and every borrower. We may ask for an item, but once we receive that item, we may see things that don't meet the guidelines or don't accurately demonstrate the proof of where the deposit came from when it was deposited or how it was deposited. So we may ask for a little more information in order to achieve this. We work hard to come up with the simplest of solutions for our borrowers when sourcing these assets. But it isn't always easy. The very best thing a borrower can do is be proactive. Try and get all of the funds into one account 60 days before they go through the loan process. Very often, however, we understand that is not possible. We understand it very well. If deposits are going to have to be made into the asset accounts, then it is best to try and make sure that the deposits are documented. Cash is highly frowned upon because it's nearly impossible to source where you got that cash. If you must accept a deposit, insist that the deposit be written to you on a check or be transferred into your bank account. If transferring from other accounts, be aware that the other account statements will also be needed to make it match up. The bottom line is to prepare and be proactive. It will help us as your lender, but most importantly, it will help you as the borrower to a smooth loan process. Again, thank you for taking the time to watch this video. It will truly help us to provide you a financing experience that is unlike any you will find. Several more videos will be sent that are very important to truly understanding the loan process. I urge you to take 5 or 6 minutes each day to learn a little more about the loan process. After all, this will be one of the most major purchases you will make in your lifetime. If you have any questions whatsoever, my team and I are always eager and excited to assist you through this process. We can be reached at 801-574-4293 or via email at mortgage@tylersutherland.com. Also, please feel free to visit our website, www.saltlakemortgagevoice.com, to take advantage of some of the mortgage calculator and home search tools that we have provided to help make your home search and refinance simple, fun, and stress-free. Thank you, and we look forward to assisting you in purchasing or refinancing your home.